Now, the U.S. Federal Reserve has raised its key policy rate to the highest level in a decade, thanks to a stronger American economy. This is the Fed's first major decision taken under its new Chairman Jerome Powell. And as our Kim Hye-sung reports, it looks like interest rates are going to rise faster than previously expected.
On Wednesday local time, in its first meeting under Chairman Jerome Powell, the U.S. Federal Reserve raised rates by 0.25% to a target range of 1.5% to 1.75%. It was the sixth increase since December 2015 when the Fed started tightening monetary policy for the first time since the financial crisis.
The job market remains strong, the economy continues to expand, and inflation appears to be moving toward the FOMC's 2% longer run goal.
The Fed also boosted its economic outlook, signaling it may favor a more aggressive pace of rate hikes. It expects faster economic growth in the U.S. this year at 2.7%, up from its December forecast of 2.5%, and it sees growth of 2.4% next year. Policymakers continue to project a total of 3 rate hikes this year, but they sped up their plans for next year, calling for 3 more rate hikes instead of 2. Now, U.S. rates are higher than South Korea's for the first time in more than 10 years, and the Bank of Korea currently has its key rate at 1.5%. At an emergency meeting Thursday morning, BOK Governor Lee Ju-yeol said the central bank is ready to act to stabilize financial markets if necessary. But he added that the U.S. rate hike was widely expected and that it'll have little impact on the South Korean market, citing Korea's strong economic fundamentals and fiscal soundness.
A short-term base rate difference between the U.S. and Korea will not trigger a sharp capital outflow given our economic fundamentals. But if the rate gap continues to grow, with the Fed expected to raise rates 3 times this year, capital outflow could happen. So the BOK is likely to raise rates this year 1 or 2 times.
At the confirmation hearing for his reappointment Wednesday, BOK Chief Lee Ju-yeol said he would be cautious about the timing of any rate hikes, pointing to external risks like growing trade protectionism and domestic issues like the growing income gap, household debt, and subdued inflationary pressure. But if the Fed hikes rates again in June, the gap with South Korea could grow, so all eyes are on the BOK's upcoming monetary policy meetings, which are scheduled April, May, and July. Kim Hye-sung, Arirang News.